Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome again to the channel. Once again, it is good to see you all here. Okay, so I know you guys have been following my videos that I've been putting out, mainly around market profile. I think I've made it my mission to kind of put this out there, make people aware that there is something here that will give you an edge in trading. I think for a lot of people, finding that edge is really difficult because you're using models that display the market that are outdated, difficult to use, and professional traders don't use. So you find it very difficult to sync with the order flow. You find it very difficult to do top-down analysis, which is really difficult in itself, but you need something that can give you an edge when you're trying to do this, right? So in other words, it needs to be simplified. See, us humans, we don't have the capacity to process especially data in huge amounts. Like, humans evolved to focus and deal with the natural environment, so we can absorb real-time information much quicker, right? So we have the ability to continue to update our analysis as we go of our environment. Now, of course, this is why people change a lot, they strategy hop, is because they keep updating their reality based on perception. So if they perceive something slightly different today than they did yesterday, they'll update their reality and change their approach because they are visualizing what they believe to be a change. Now, most charting packages or most charting platforms, candlesticks or charting ideas are based on something that looks very static. So we can't see the dynamic changes within the price action. Right, so this is the difference, right? This is the key difference that market profile brings to the table that other methods of charting doesn't, right? And you can call it as you like. We know pattern recognition works, so candlesticks would work to a degree. And if you're comfortable with candlesticks and you're really able to pattern recognize, then that's great. It means that your brain has been able to store a series of patterns, and then you're able to identify that in the marketplace. Now, of course, candlesticks do have their place, right? I do a lot of structural analysis, and I can't do that with a profile just because there's not enough screen. If I had like a 60-inch screen that I could literally take this size profiles, right, and put it on a 15, I'll be able to see, like, I'll be able to have a 300-week look back. There's also other limitations like data. The amount of data that the brokers can condense into a profile format is going to be limited. I generally have maybe 50-60 week profile look back before I run out of data. The brokers just don't hold enough data to look back further enough for you to build structure, right? So once I get to about 50 weeks on my profile, I can't look at it anymore. Whilst on a candlestick chart, I can definitely get a little bit more look back. Even though I'm getting a closer view of the market with the profile, I can execute in a longer time frame or against a longer time frame in a smaller time frame window without actually having to look at that smaller time frame, right? That's gold dust right there. But anyway, back to the charts, right? So if you want to learn more about market profile, then you should check out, I've got courses on this. I've got Discord, and I'll put them all in the links below. I've got a free Discord that you can pop in, engage, have fun, have a look at what we're doing. I post a lot of charts on there. I post some of my own trades on there. Whatever I do, for those of you guys who don't know me, I've been in trading since 2008, right? So since the financial crisis. Some of you was probably watching this video even quite young. So I've been trading for a long time, but also I was a broker. I was a institutional broker for a long time. I also did a lot of analysis. So essentially I was what we would call it in the industry, a market technician or market analyst, right? So I did a lot of what one would describe as dealing desk activity, right? So again, I've been on the sell side of the business, or the institutional sell side, as well as I've also been a trader in the market. So I actually understand both sides. I understand the buy side's problems and the sell sides, and I also know what the sell side look at. So I have extensive links in this industry, in this business, right? So I know what I'm talking about. But either way, I've got a lot of stuff that I post up. So I post up my own trades. Generally, from a trading standpoint, you will see me trading the spot market. So I cut my teeth in the currency markets. So I'm more familiar. So I'll always throw FX on. I expanded my knowledge into indices, and then obviously commodities, because at some point as well, I was what you would call a physical commodity broker. So I do have an affinity to lean towards commodities as well. So again, I've built a good foundation in financial markets. Probably nothing I haven't traded or looked at. Some things just didn't suit me, so I didn't stick with them. But I've traded everything, right? So whether it's pork bellies or live cattle in the futures market, or it's index futures like the ES, for example, or it's oil, whether it's oil minis, or it's bigger CL crude contracts, or it's CFDs like I'm displaying now in terms of data feed. I primarily sell option premium. I think there's a massive edge there, and if you want to learn more about that, then the best place to find out is on the Discord. Once again, yeah guys, these are shameless plugs, right? Because you're going to get the most value when you check this stuff out. So it's not for me. Either way, I've traded a lot of stuff. So I generally now sell a lot of premium, and then I focus the rest of my time on looking at the spot markets. I don't oversize my trades, so you will see as I discuss, I have positions that are relatively small, but I build a portfolio around what I trade. So eventually the return on investment is a lot bigger. So the positions look small, but when you aggregate them, I get a pretty decent return. So again, I'm not greedy. I'm realistic about return. So I know that if I spread my portfolio right, you would see sometimes I'm up, 1.5K, 2K, within a sort of week, just diversifying and looking for good trade location and trading out of those. The ability for your trades to work when you're trading on longer time frames, right? So you're technically swing trading, but a lot of your trades are going to be happening within the intraday anyway, because whether you're a swing trader, whether you're a position trader, whatever you are, you're going to have to execute your trades within the intraday, right? And that means that you're going to have an intraday position. Until that day rolls over, you're not a swing trader. So if you get stopped out in a day, you're an intraday trader, because you bought into a position and then you had to be stopped out, so you needed to sell to get out within that same period, right? Or if you sold into a position, you need to buy back your position to get out. So either way, your stop loss is order in the market, which makes it an intraday order if it's triggered within the intraday. If it rolls on to another day, then yes, that position stops being an intraday position because you've carried inventory forward. In my opinion, there's hardly any difference between the two, other than the day trader will make more effort to not have a position. So usually I find this is more suitable to equity traders. So if you're a stock trader, you're more suited to day trading. I think if you're a currency trader, you're going to get periods where volatility is just dead in your currency, and you're probably going to have to roll that position. So you're going to turn an intraday position into a swing position. At least that's what I find. So it makes sense to approach the market from a swing point of view, because you get the most pips from it. And if you don't believe me, take for example this chart here. Let's say on the dip back, you were buying good trade location, coming off a bid stack, you were buying the Aussie, right? And your stops were below the low of the prior weeks, right? So you can see here that, when we think about it, pip weight, it's about 44 pips. People have that exposure on their intraday positions. Now the market traded to a high, it's about 224 pip high back to the high. It did that in 3 weeks, right? So if you do the maths to that on a standard lot position, what's that? 2,246 quid, right? So that's what you pulled in 3 weeks. So if you want to divide that into 3, it gives you approximately how much you made per week on this position from bottom to top, right, on the high. Now let's say week number 2, it was 1,620 pips. You decided you're going to take profits. Depending on when you entered week number 1, which would have been here, it could have been on a Friday. So maybe by the time we got to the following Friday, which is 7 days, you were 162 pips up. That's a $1,600 quid position, right? And you risked 44 pips, so $440 risk on the week. You're claiming 1,620. That's a 4x return in a week, and that only happened because you're executing the week. Now think about how many trades you would have lost in the intraday if you were an intraday trader just trying to catch 162 pips. Think about it for a second. In an intraday on an Aussie dollar position, you're probably trying to capture 30-20 ticks. So the risk on that position is a lot higher because you are looking for short-term volatility. It's the reason I focus on the weekly profiles. Enough said. Right, so where do we stand this week? Well, as you would know, I was always anticipating a pullback on the Aussie, and that's happening. I'm looking for this to run into the bid stack or at least close the gap, take some pressure, and I'll look to be long, right? So again, for me, this is always a buy the dip play because I think structurally we're quite well positioned on the Aussie. I think this would be a play where we want to see how the rest of the week plays out, but for me, this is a play that I'm looking for into next week. So the Aussie for me is an asset in play into next week. Crude oil, I already have a position on this, and I will be sure to flash my P&L on the screen at some point. I have been doing that so far. Maybe I continue, maybe I don't, because I have to separately kind of put it together in editing, but not to worry. I will be showing you some of the positions I'm in. So again, crude oil is one I've had for a while, and we're moving higher as expected. I'm actually expecting a break on crude oil to the upside. So again, let's see where we land. We've got last week's high, and we can see that most of the sellers have given back. For me, this is a potential maybe 3 week position back into the highs. Okay, even if we stop short, we've got some offer stacks here, so we've got to be mindful. I think initial targets have to sit about roughly 77.50, right? So we need to watch out for the offer stack, but more than likely we will end up visiting value, which is what we tend to do a lot more than not. The S&P 500, I'm bullish on this one. I'm already in a long position, so again, you can see that from my P&L. Of course, again, I'm looking at an upward break. The S&P structurally is bullish for me. I think we're probably looking at maybe 4,300, 4,400 in the next couple of weeks. At least that's where my head's at. But we are approaching an all-time high. So again, as we trade up to that high, we tend to find this becomes a liquidity hunt, a bit of a pullback. And if we're going to get continuation, we won't get that till we pull back. So again, because of how we're positioned structurally, this could be a position you could add into over time. So definitely bullish on the S&P 500. Gold is inside value. We spoke about this, the volatility. As you can see, the responsive sellers are still in play. For me, I would like to see us get out of this inside value framework, whether it's by trading the P period high, which will be a good bullish indication. We do know that there's a possibility here we could see 2,300, 400 an ounce on gold. I think I'm looking more for a pullback into that 2K region. We did somewhat get that, but we're not there yet. So there is also a propensity structurally anyway for gold to pull back to 1,800. So for me, it's a really risky asset, and that's why I'm not touching it at the moment. I'm staying well clear. Cable, of course, we're pulling back. I have a position on the pound, and this would always be an add to story. I think the pound is structurally bullish, so very similar to the Aussie. We are now trading into value, and then we're picking pressure right now at this late bid stack. Late bid stacks rarely survive. So if we split the rotation here, we really want to pay attention to this. I think that we could trade through. We are going to be limited by range for sure. So again, a retreat to the upside makes this level a really good add. But I want to see how next week turns out. So we are Thursday, we're late in the week. So maybe taking a long position might not be the best strategy. Let's see how next week sets up, just in case we set up next week, we trade out this print here and go a lot lower and then pull back from there. Obviously, I had a really good trade location for the pound. I'm way down here, so I'm not really thinking about jumping out of this anytime soon. Dollar yen, I'm bullish. Again, I was a little bit early on my entry. I'm a little bit higher on this, so I have negative P&L right now on dollar yen. However, I've always highlighted that these are the risk places, right? This was good support, value low. We've already bounced off that. So if you were patient enough, which is what I said I was going to be, but I wasn't. If you were patient enough, then this becomes a very good buying area. and ultimately you will be in positive P&L. So again, it's that trade location thing. I executed literally mid value, inside value, and I did say though that dollar yen was the only good inside value play that I'll look at, because I think that the dollar is structurally bullish against the yen. And for me, it made sense that if I'm long here, I can hold against the 2-week low, right? So it's really important where my risk is. So I've exposed myself a little bit, reduced my position size on this one in order to get the trade. However, impatience was my problem. However, we're significantly back up. So remember, I've held this, it's pulled back, and now we're really close to where I got it. So no danger. Dollar CAD, filling the gap. We spoke about this. I would look to sell the dip, which is the plan. So dollar CAD is an asset in play for me. I just want to see it go up. Stronger dollar slightly against the Canadian, and I look to sell the rip. I think structurally we're bearish on dollar CAD. Bitcoin, interesting play. We've had a responsive buyer step in. I'm waiting till next week. Bitcoin can get volatile. If we trade out the X period low, we're going straight down, and we're probably looking at 24k, where I'd look to be a buyer. Bitcoin for me structurally bullish. Cyclically, it's also within the early stages of its bull cycle. So I'll be very cautious taking short positions against crypto. Sterling yen, we're basing out now. So again, it's reflecting that dollar position. We're trading off a bid stack. We have a massive gap in value though. So I'm paying attention to this, because again, next week we could slip off. And that's the risk that is with sterling yen, dollar yen, the yen pairs. There is that risk there, and we're also seeing a similar risk with cable at the moment, where we're settling here and we could potentially break out next week. We are forming a gap in value, so it will be really good news if we drop a little lower and I can get another fill here. I think we have a good chance now of trading back into the offer stack. If that happens and that offer stack doesn't hold, we're going to get a mass liquidation, and that's more trades to the upside. We could be looking at 130 in the next couple of weeks. So cable's a good position for me. I'm just literally waiting to see if we can see a bounce here on opportunity, trading off the higher liquidity up here. So we'll wait and see. But for me, we're structurally bullish. So hopefully this was just a quick one to sort of end the week. I hope this has made a lot of sense. I hope you enjoyed the videos. Like, subscribe. Let's build it. Let's build this channel. I'm trying to do a lot of good stuff here. I think there are a lot of people here not reflecting trading. A lot of cool videos on you know how to make millions trading, but I think we definitely need to get into the meat of how everything works. But once again, like, subscribe, hit that notification bell. Till my next video, guys. Adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?